Hi guys, welcome to Gold Price Daily Analysis. Today is Thursday, 20th of June 2019. This video is brought to you by the coach. Remember, always our job is to make you rich. If you are a new subscriber, welcome aboard and thank you for joining us. If not yet, please hit the subscribe button. I do urge you to check out the description of this video for the link of the Telegram room. At times when there are important updates, we can reach to you through the Telegram, and I also urge you to check out our last two videos in order for you to get the best of this video. We are going to start our cornices right after a quick recap. On the economic calendar for Wednesday, we have been waiting for very important economic headers. We'll start with the Fed interest rate decision. It came as is, no change. For the FOMC statement, what matters for us that most of the FOMC members agreed to or voted on a one or more rate cuts to be delivered as soon as needed. And for the conference, the Fed Chair Jerome Powell talked about the economy actually, and how things are going with the U.S. economy, and that the economy is living in some sort of a special case. Like the service sector is doing very fine, but the manufacturing sector is low. The employment is high, but the inflation is not achieved. So what we can abstract from what he said, that the competitive action on the monetary policy is serious, and the Fed is going to cut interest rates soon. For the gold price action, gold as expected, it traded most of the day in tight range, printed a higher low at 1,341, with the FOMC statement which stated clearly that there is one or more rate cuts, made it to 1,362 and maybe more. That's all for the this section. We will be moving now to the strategy recap. Our last episode, we said due to highly anticipated volatility in the gold market, we are not going to issue a trading advice, but our forecast was that if gold closes above 1,346, then most likely gold is to advance toward the highs of the year, about 1,357 and plus. And that was anticipated before the FOMC statement is even out. However, gold closed on the last trading session below 1,346, which changes the predictions according to our frame of analysis. Also, however, gold made it to 1,360 plus after the statement is out. That's all. We'll be moving now to the economic calendar. On the economic calendar for Thursday, and from the United Kingdom, we'll be waiting for the following economic headers: the Bank of England interest rate decision and the Bank of England meeting minutes, retail sales month to month for May, and the core retail sales month to month for May. From the United States, we'll be waiting for the Philadelphia Fed manufacturing index for June, the initial jobless claims, and the continuing jobless claims, also Philly Fed employment for June. That's all for the economic calendar. We will be moving now to the technical indicators. On the last trading session of Wednesday, we have had a trading range from 1,341 plus to 1,362 plus. Numbers are rounded and the market is still open. For the closing price, gold spot is expected to print a close price above 1,360. The number is rounded and the market is open, and it's very hot, and it could move up higher. For the daily simple moving averages, gold is trading in a bull trend above its daily simple moving averages. For the RSI readings, the 30 minutes is 81 overbought with positive momentum, and could signal a correction. For the 1 hour, 78 overbought with positive momentum, and it could signal a correction. For the 4 hours, 68 bullish, and for the 1 day, it's 76 overbought, and it's also could signal a correction. For the supports and resistance, The first support, gold should find about 1357, then 1350, and then 1347. For the resistance, located at 1365 and 1375, then 1396. That's all. We'll be moving now to the trading strategy. Technically, gold is trading in a bull trend above its daily simple moving averages. The RSI readings are overbought on the 1 hour, 1 day charts. Gold opened the route by closing above 1357, opened the route toward 1420. We have resistance about 1365, then 75, then 96. And the very important thing, as I said, that gold closed above 1357. For the fundamentals and sentiment, the luck finally smiled for the gold bulls. One or more rate cuts are secured and expected to be delivered within the coming 18 months. Most importantly, there will be no more rate hikes, and the Fed was very clear on this point, with the majority of the members voting for one or more rate hikes to be delivered for one or more rate cuts to be delivered as needed. The question is why easing or lowering interest rate is so welcomed by the gold bulls. The answer is that gold is an unyielding asset, and by easing or lowering interest rates, gold can compete with other classes of assets, and the opportunity cost of carrying the gold will be less, especially when you compare gold to other safe haven like the US dollar, especially the US dollar. For the trading idea, technically gold is overbought and correction could take place at any moment. On the other hand, I don't think that gold bulls will lose the chance and get away from this hard earned price level. So we have two ways to play this game. Either we play buy dips at large quantities. We close them in a short range of $3 to $5. The other way around is to jump in the rally, just buy a small quantity, start with a small quantity. I put like 80% that gold will climb higher without any correction, at least toward 1380. If a correction happens and took the gold down toward 1340, you can accumulate more and build more of your position, because gold is going nowhere before it touch 1420. That's all for today. Thank you guys for watching this video. Please share, like, and subscribe, and I will see you tomorrow in another video.